Hi, we are here today with Laura Chau and Bianca Cabán to talk all about how to position your startup for hypergrowth. And what does that mean exactly? We'll be getting into. This is part of Office Hours with Lisa Wang, who's unfortunately not here today, but we'll be going through a lot of different questions, opening it up for audience Q&A. So at any time during the session, feel free to drop in your questions using the Q&A function at the bottom of your screen. And we are so proud to host this at Team Alice, helloalice.com, with PepsiCo as part of their WomanMade initiative to support female founders. And if you're interested in learning more and getting more help in your business, you can join the WomanMade community at helloalice.com and sign up for the next office hours through there. So Bianca, would you like to kick it off and let us know a little bit about yourself and Laura and what we'll be talking about?
Absolutely. Thank you so much, Sandra. And I'll just kick it off with a quick introduction. I'm Bianca Cabán. I lead the SheWorx community within Republic. Republic is an equity crowdfunding platform that spun out of AngelList a couple of years ago. And happy to go through that if people have questions on equity crowdfunding at the end, if we have time. But what I'm really excited to talk about today is how to position your startup for hypergrowth. And here to speak with us about this really exciting and important topic is Laura Chau. And I want to quickly read a bit of her background, which is incredibly impressive. Laura thinks about startups not just as businesses, but as carefully crafted works of art. At Canaan, she focuses on consumer technology. She previously worked in Deloitte's strategy and operations practice. She has also worked in sales and marketing functions within Kabam, acquired by Netmarble, Branch Metrics and Greenhouse, as well as working closely with Marie Kondo to launch the author's product business. She holds a BS in Management Science and Engineering from Stanford University and an MBA from Stanford Graduate School of Business. Welcome, Laura. Thank you so much for being here.
Thank you so much, Bianca. I'm excited to be here as well.
Awesome. So it looks like we have a few attendees that are still dialing in. I'm just curious if we can just hear in the chat where folks are dialing in from and your name as well. Looks like we have a few. Oh, hi, Anna from San Francisco. Thanks so much for joining us. I'm based in the Bay Area, so maybe one day we can grab a coffee. Let's see, who else? Anyone else want to say where they're dialing in from?
I'm dialing in from New York, although
awesome. Thanks, Laura.
Bay Area native or person, so I miss the Bay Area, Anna.
Incredible. Okay, great. So we'll kind of wait for folks to dial in a little bit further, but why don't we kick it off, Laura, by just level setting a bit. And if you can tell us about your fund and as well as your investment thesis, that would be really helpful. And then maybe just a little bit about kind of the day-to-day of how you think about sourcing startups and your work.
Happy to. So Canaan is an early stage venture capital firm that's been around for about 32 years. We have about 5 billion assets under management and are currently investing out of our 11th fund, which is an $800 million vehicle. Within that, about 40% of what we do is healthcare. So think life sciences, biotech, pharma, therapeutics, and 60% is tech. Within tech, which is the side I sit on, we're about 50-50 enterprise consumer. I almost exclusively look at consumer investments, and we define that very, very broadly. It's truly anything that touches an end consumer. So that's consumer internet, products, services, CPG, even prosumer businesses, and sometimes SMB businesses that really have that strong connection and relation to the end consumer, whether that's an employee or a professional. And then for Canaan more broadly, we invest in basically everything. So on the enterprise side of the house, it's also security, infrastructure, enterprise SaaS, space tech, deep tech, frontier tech, all of the X techs that exist today. And then I also mentioned our healthcare side. In terms of where we invest, about 80% of what we do is seed and Series A. and 20% is Series B. Every now and then we'll do a Series C deal. We're typically lead investors, so that means we are looking to write the term sheet, take a board seat, and then we'll also reserve capital to follow on. We're typically targeting 20% ownership for the early stages. So for a seed deal where we're leading, that's a $2 to $3 million check. For a Series A, it's a $5 to $10 million check, and Series B, it's up towards 15, 20, depending on the size of the round.
Awesome, super helpful. Thank you so much for kind of setting the context and stage there for us. So in terms of this topic around hypergrowth, I want to dig in and just ask, what are the essential foundations your startup needs to be prepared to scale?
Mm-hmm. It's a very big question, and I think it's a question that founders often don't think about enough, because you're in the early stages of your company and so many things are just about blocking and tackling and making sure you can get from 0 to 1. And that's such a big question to tackle already. The 1 to 5 or 1 to 10, beyond that, oftentimes feels like it's in the distance. But to your point, I think it's really important to start thinking about it early on. And in terms of the foundation to lay, I think there's a few core things, but every startup is sort of this unique snowflake or work of art, as you mentioned. So a lot of the details can be different. But the thing that I think is so critical that I tell all of my startups is hiring. You really want to make sure that you are hiring not only athletes who can get things done in the early stages, but individuals who can become managers and own departments, because once you really hit that hypergrowth stage, you'll need to build out all of these different departments and have people who can not only hire for them, but who can manage them, who can run a P&L, who can report into you. Once you're getting to that hypergrowth stage, it's really about scaling and where you can get the most leverage. And in my opinion, where you can get the most leverage is through hiring the right people.
That's great. And we've actually had a few more people join. So I'm just curious, if you can, feel free to say in the chat where you're dialing in from and your name, and also what kind of company you have would be super helpful, just so we know how to tailor the questions. So we'll let people do that. So while folks are maybe writing in, let's dive into this topic that you kind of brought up around hiring. But before we go there, what about, so as we think about companies and scaling, how do we think about this tension between the current team that exists, maybe at the earlier stage, and then how to make sure that your team is sort of changing, but changing in a positive way as you scale? Oh, we have Arpita, who's dialing in from Cornucopia Living, Princeton. Or sorry, her company's Cornucopia Living, and she's dialing in from Princeton. Hi, Arpita. And then we have Elise Robinson, founder of Be a Foreigner, and she's located in Merida, Mexico. Amazing. I got invited to a wedding there. Anyway, sorry, Laura. Very cool. Thanks so much for letting us know where you're dialing in from. So just, back to this topic of, you're bringing up this dynamic of team. So first, how do you build that early team to ensure that it's setting a strong foundation? And then as you scale, how do you think through changing dynamics in a positive way versus a negative way as you're adding people and finding new talent?
I think one of the critical things is setting expectations from the beginning. And again, this is where my point comes into play of founders really have to be thinking about, the 1 to 10 when they're still in that 0 to 1 stage. So what that means is, having frank conversations with all of your employees up front of, we're planning to grow. We want this company to be really big. These are the types of roles that we expect to have in, the next couple of years. Here's a plan for you as an individual where this is what your role looks like today. In the future, it's going to change, and we know that, but here are the, key characteristics that we look for in someone who could grow into a manager role, right? And really creating ladders for each of your individuals so that they can continue to climb. They know what those marks are for them so that they have something to aim for, but also setting the context that as you grow, you will need to hire in new people, right? Hopefully there's a place for them to grow into that role, but there might be others that need to come around the table, and not necessarily promising upfront that that individual who's in the seat today will be the director, right?
Yeah, no, that makes a lot of sense. And I love that idea of kind of setting expectations early on that, you know, with joining a startup, there's really fast evolution and fast and furious evolution. And so things change quickly. And so you really probably need folks that are willing to adapt and change their roles along the way. So I think that's a great point.
Yeah, and
I think, yeah, go for it.
When you're hiring, look for people who have that adaptability, right? If you are looking for someone who can just fit a role for, you know, the next 2 years, that might be what you want to do, but hiring can be so difficult and time consuming and costly that if you can find that unicorn of a person who can really grow with the company, who can be flexible and hopefully can grow into a new position or into an expanded position over time, then that's really where you're going to get the most leverage.
Absolutely, that makes sense. This might be a tougher question because it is such a hard topic, but is it possible, I mean, are there any signs to look for when you're hiring that show that adaptability at all, or is that just really hard to kind of tell?
You know, if I'd be interested from others if they have, you know, go-to questions that they have or ways to ask this. I don't have a tried and true answer. Some of what I look for, and again, I think every founder is a little bit different in terms of the culture that they're building and what they're looking for. But some of what I look for are just anecdotes from their past, either past experience, professionally or personally, of their ability to kind of morph into a different role or to roll with the punches. And you can start to ask questions to see, you know, are they the kind of person who needs so much structure, which maybe in a later stage company would be great, but, you know, they need the resources to, you know, feel really comfortable? Or are they someone who within this sort of ambiguous environment are able to identify opportunities or identify, you know, where they might grow or change? So
that's great.
It's a hard question to answer, but I think those are some of the traits you might.
Yeah, no, that's super helpful. Thank you. And by the way, we just had Joyce dialing in from the Bay Area. She's co-founder of WeSolve, a social innovation platform. Thanks for joining us, Joyce. Very cool. So, and I see some folks have started to ask questions. Feel free to do so as we go along. You can see the Q&A box at the bottom of your screen, and we will make sure we get to the majority, if not all, of your questions before the end. So do start asking questions as things come to your mind. So let's move on to, I think we'll circle back to team within the context of mission, but I first want to talk about KPIs. This is really important, kind of big topic. What KPIs should founders be tracking? And I know, of course, it's different for different business models, but just maybe on the consumer side, first, but we can tackle that. What KPIs should founders be tracking, and how do they make sure they are avoiding stagnant growth?
Again, a tough question to answer given how varied some of the business models are, even on the consumer side. But some of the core things that we look for are first and foremost revenue growth or user growth, depending on your model. And so you're looking at year-over-year growth or even month-over-month growth. You're looking at cohort data. So how are your early cohorts performing compared to your later ones? And I think for any VC, the cohort data is probably where we spend the most time really trying to understand at a granular level what your company looks like and what some of those different triggers might be, or different levers that you can pull to influence the trajectory of the company. You know, margin profiles, again, depending on the company. If it's a audience-based model, user engagement, so, you know, daily active users, monthly active users, session time spent in app. I'd also say, you know, looking at the different channels that you're going through, customer acquisition cost, unit economics. And then some of the other things that you might pay attention to in your business might be kind of the profitability per employee, in particular profitability per engineer, depending on the type of business you have. You know, if it's a brick and mortar business, profitability per square foot. So again, I just threw a bunch of KPIs up.
Yeah.
What I really talk to my founders about is figure out what the right KPIs are for you. Some of them might be those standard things that we just talked about, but for many of these businesses, they are the first of their kind, right? Or it's a new business model. There's some sort of innovation that they have. So what is the unique KPI to you that really matters? And it might be totally different from another KPI that exists out there, but make sure you set that for yourself early on. And maybe it changes over time, but if you're tracking it, you'll be able to keep yourself accountable, and make sure you're progressing correctly. And then maybe in a year you adjust that KPI and it's slightly different. But tracking everything and having the data is paramount.
It sounds like you can essentially map your KPIs to potentially what investors are looking for. But regardless of whether or not you end up pursuing venture capital, it's probably a good idea to be monitoring those anyway for the health of your business. Yeah. And so, some of the founders on the call might be maybe looking to fundraise from VCs now or in 6 months, or maybe they're not sure. But regardless, I think these are really useful metrics to be keeping in mind in terms of what an investor like yourself is really going to be looking for. So it probably makes sense to be super disciplined around that as soon as possible. So I think
another thing that I would recommend, especially if you're thinking about raising venture capital or private capital at some point, is to start having those conversations with investors early, even if you aren't fundraising, because then once they know a little bit more about your business, they'll be able to tell you, oh, this is what I think is really interesting in your business. This is what I would like to see, or this is what I would like to see you prove out. Maybe they'll have, hard numbers for you around what they would like. More likely than not, they'll just have kind of a concept of a KPI, but it can be really helpful so that you can start to crystallize what the right KPIs are for your business.
Right. I think that's awesome advice. And so props to everyone who joined this call, because you're kind of taking a proactive step to really understand what investors are looking for early. So that's great. And we've had another question come in. Just a quick reminder, if you just joined the call, don't forget to think about and start to type in your questions into the Q&A button at the bottom of the screen, so we can get to those when we're done with the structured portion of the call. So with that, I have a couple more questions for you, Laura, and thank you so much for answering these so comprehensively. Let's talk a little bit about, as hypergrowth kicks in, hopefully, how do you ensure that you, your company, and your team are staying on track as it relates to your mission and vision? I think this is such an important question in this kind of day and age where companies have, double bottom lines. They're focused not just on profitability, but also how they're impacting the world around them. And so how does a company think about this kind of dynamic between hypergrowth, but also maintaining and staying true to your mission and vision?
I think it's a very relevant question, because there's a number of big companies who I will not name that have struggled with that, right? Like they've really hit hypergrowth, and because they've been growing so quickly, a lot of the culture, a lot of the values don't necessarily get trickled down, especially if you have international offices or remote offices and thousands of employees. It's really hard to indoctrinate that culture. But what I think is important to do that, and there are examples of companies who have done it really well, is making sure, one, that the tone is set from the top. And I truly believe that culture is really set from the CEO, the founders, and kind of those executives at the top. So making sure at the senior level, all of you really understand and agree and are not only sharing those values, but modeling them, because those individuals, going back to our hiring point, are going to hire the next layer of individuals who hopefully share those same values and that same culture, who will then hire even further down the line.
That's a great point.
And so a few things that you can do to help on the hiring front. One is having a really clear hiring rubric of what you're looking for. So it's not just people who are looking to hire people like themselves, but instead they're looking to hire people who fit the mission, values, and the skill set that you're looking for in that company, so that it's really kind of flowing throughout all of your people, because at the end of the day, your people build your culture. A number of startups that I know or work with, have their values up on the wall, right? Or they'll, have them shared so that everyone can speak to them. They know what they are. And, the values are very clear and crisp. They're, these are our 3 values, or these are our 5 values, not here's 20 things that we stand for, because then I think it starts to get diluted. But again, it's not only about putting them on the wall just so people can say that's what we stand for, because Enron did that, for example, and they had their values outside their building. And I think, we know where that went. So it's again, really about modeling them from leadership all the way down. And then I think there are other kind of cultural things that you can do, and that's where some of the creativity of the founder or the leadership can come into play, of what's unique about your culture and how are you going to continue to share that. Maybe it's through all hands, maybe it's through retreats, maybe it's just through small touches of celebrating someone in the office or celebrating a small moment. I think there are different ways, depending on what those values are that you're trying to share, that can really create traditions or create sort of an internal culture that is then easier to spread from place to place as you grow.
That's great. Yeah, and just a quick shout out to Republic. I am currently on our team retreat in Fire Island, New York, which is very exciting. So you talk about culture and building that, so that we're very active at Republic. So that's great. Yeah. So just circling back, and we have had a few more questions come in. Keep those coming. I'm going to open it up in a few minutes to the questions that you all have. So kind of continue thinking about those. If things aren't going as well, so let's say, you are not necessarily, it doesn't look like you're on the path to hypergrowth and you're starting to actually see stagnated growth. What are ways to mitigate that, or maybe telltale signs of, maybe this company isn't set up for hypergrowth, maybe that's not going to happen, and maybe a founder should start to think about pivoting or changing the business model?
Yeah, it's a really common occurrence with startups, right? I think the number of startups or percentage of startups who are really able to make that jump to hypergrowth is small. And it's, first of all, I would say to every founder that because your business is stagnating or maybe, growing a little bit less slowly is by no means indication that it's a failure. It's very normal and expected. But in terms of what to do or how to think about it, I think there's a couple things. One, again, I keep going back to saying, think about, your plan from the beginning. I think a lot of founders will set milestones for themselves and expectations, so they know, okay, this was my goal at this point. It looks like I missed it, right? What's my plan from there? If I missed it, let's give it another quarter and see, if things turn around. If they don't turn around, then, maybe we think about pivoting. Maybe we think about reducing headcount. Maybe we think about a plan from there. But making sure that you stay accountable to some of those milestones will really help make sure you stay on track, rather than, letting it go all the way until the end and then having, a catastrophe at the end where you're scrambling.
Are there any signs of life that might show a founder that this is hard times, but it's not where you should be pivoting or thinking of kind of giving up or shutting down? Is there something that they can hang their hat on that you typically see?
I think it goes back to what those core KPIs are, right?
Right.
And what makes their business unique. So maybe revenue is slowing or maybe user growth is slowing, but they can see that they've just figured out a new acquisition channel, and they haven't poured money into it yet, but if there's kind of early signs that it'll work profitably, and that's a new avenue to go down, and that's worth testing for the next quarter, right? Or maybe
That's great.
Launched a new product that, again, early in the market, but they've seen really great signs of product market fit or customer adoption, and if they can put a little bit more money behind it, that's worth going after, and maybe that's where they fuel the fire. And so again, at the early stage, I think it's really important to have a lot of these tests going on so that you aren't always hanging your hat on a single thing. And
Right.
a lot of these businesses that are at hyper growth or hyper scale, they figured out one thing maybe, and then they start to think about a bunch of others, or they're working on something they haven't figured out, the one thing yet, but they're testing, 5 or 10 different things, and one starts to take off, right?
Right. It's super helpful.
Mm-hmm.
Awesome. Well, thank you for that. So I'm going to switch over and see if we can start to answer some of these questions. And then again, folks that just joined, feel free to ask a question and we'll make sure it gets answered. But one attendee wrote, Canaan's website lists, "We're in the know, not in the way," as part of their approach, which I love, all caps. I'd appreciate your advice on how we can grow managers and leadership at our companies to have a similar approach.
That's a good question. One of the things that I see at a lot of startups is, depending on where your managers are coming from, oftentimes they have kind of figured things out on the fly. There isn't like formal training for a lot of these things like there might be in consulting or banking or a more traditional path. And so making sure you really spend time with all of your managers is important. And again, you can model that from the senior leadership. So giving them leash and kind of saying, these are the goals I want you to hit, but, I leave it up to you to figure out how you want to do that. But also, I think it's also important to make sure that their management style and their reviews from their juniors are also a part of their evaluation, a part of their compensation potentially, so that everyone is incentivized not only to do their work, but to cultivate the people below them, so that again, you're not in the way. You're helping to make sure that everyone else can rise up too.
That's great. And I want to skip to another question that just came in because I think it kind of builds off of what you were just speaking about, which is, how do you balance pushing your people to achieve tough goals and hyper growth with trying to make sure they don't burn out, which I think is very, very real. It's a great question. So yeah, what are your thoughts on that?
Another tough question. Tactically, I'll start by saying, there's a number of great tools like Culture Amp or Glint and a few others that allow you to have a better handle on kind of the internal feeling or buzz within the company. So are people feeling burnt out, and a little bit more stratified, like what are the areas where they might feel less positively or more positively. So that
Right.
at least can give you a little bit better insight so that you can start to iterate and address some of those issues. I think the best companies who do this really make sure that they set a big grand vision for their people, right? And all of those individuals feel bought in part because they are compensated with equity, and because they really feel like there's a mission that they're driving towards. It could be a sales target, it could be impact that they're having on the broader community or consumers or enterprises, but making sure that vision is clear and that you can demonstrate the progress against it. Because if it's just this big vision but you can never see yourselves getting towards it, that's when people start to feel burnt out. But if you can demonstrate, okay, we're getting a little bit closer, we're actually doing it, you build this momentum, and then also making sure you celebrate the wins along the way, right? So you're not only celebrating when you hit that thing, it's celebrating a quarter of the way through, or you're celebrating when someone closed that big deal, or you're celebrating when, XYZ. And that, again, just helps morale and helps keep people engaged.
That's great. And so you keep teeing me up for the next question. So along the lines of what you just spoke about in terms of incentivizing employees with equity, we have a question from Jill Benedu. Benedu. Our first employees have shares in our company, but I'm not sure how to make that scale as we bring on more team members. I wonder if you could speak to some best practices around that.
Jill, I'm not sure kind of what your company is or if you're planning to raise additional capital, but typically what we see for venture-backed businesses is that you'll give your early employees some shares, and usually it's a higher percentage of the company, just given that it's a very early stage company. And then over time, as later employees come on, we're typically seeing companies continue to give shares, although it might be a very small percentage of the company. As you raise additional capital, it might be that you'll do an option pool refresh so that you're providing additional shares in that employee option pool that you can continue to give them out so that you don't run out. Companies might also do, without additional funding, they might do a stock split or an option pool refresh just so that they have that capital available. If you're not necessarily continuing to build a venture-backed business and you're not necessarily going for hypergrowth, then it might not be the case where you have to give equity and maybe you're just compensating on cash or salary. But most on the venture-backed side, we see giving shares or options or RSUs basically up until the end.
Right. Super helpful. And Anna Pickren had a question circling back to this idea of kind of employee happiness and burnout. Mm-hmm. How much turnover should you expect among employees in a hypergrowth scenario?
It's pretty common that you'll have employees turnover. I'd say from a venture perspective, if you can show that you have great employee retention, that's a huge indication or huge benefit that we're looking at.
Interesting.
But I think, when you have a hypergrowth company, the culture and just the roles are changing so much that it's pretty common that people will leave. Usually we'll see people stay for at least 3 to 4 years or until they finish vesting, especially given if it is hypergrowth, there should be great incentives, assuming they've been compensated with equity, that they are well incentivized to stay and finish that burnout. But after that, after your 4 years or your vesting schedule, most people will leave. And that's kind of the nature of it. What a lot of founders will do for their highest performers will provide option refreshes so that, a year in, 2 years in, 3 years in, you're giving a little bit more and you're giving another chunk so that they're incentivized to stay for another year or another 2 years to get that next chunk of equity. And if you growth, that could be really meaningful.
Yeah, that makes a lot of sense. I think that's a super helpful framework. And I just want to do one more call out to the folks on the line. If you have any questions, please do type them in. The Q&A button is on the bottom of the screen. I have a couple more myself. And then we did have one question. I think you may have covered a lot of this along the call, but in case, we just had one pop in. Let's see. Alice Levitt asked, I've heard that in the initial stages of scaling, the CEO of a company should be spending 30% of their time working on hiring. I don't know that I have that sort of time, very fair, but I do want to preserve the culture I've built so far. Do you think that time estimate is accurate?
I don't think it's that far off, but I think hiring comes in stages. So it might be 30% of your time for a short period of time, or it might be 60% of time for two weeks while you're hiring very senior key people. But after that, a lot of that hiring should be falling on your direct reports. I'd also say that a lot of founders will still be involved in the initial stages in the hiring, but it might not be the sourcing, it might not be the initial interviews, but it might be like the last step or the second to last step where you spend time with them, so that you're still able to do some of that check around skills, culture, values, and also demonstrate them to that individual to make sure it's a mutually beneficial fit. But you might be spending less of your time on the initial sourcing. And again, it might be a balance of the resources you have, where if you are able to outsource to a recruiter for some of that initial top of funnel or some other people on your team, that might be the right answer. But I think being involved at the very least is really important.
Great, thank you. So the next two questions are kind of circling back to topics we touched on a little bit at the beginning. We have a question around OKRs. We recently implemented OKRs which stands for Objective Key Results, to track our KPIs, but they keep changing with how we're scaling. Is that normal? Should they be changing as we scale?
I think it depends on the KPIs, but I think it is fairly expected or standard, right? Your business is naturally going to be changing. You're learning new things about your business all of the time. I think being dynamic is not only important, probably expected. So, as long as you're not so far off on those OKRs and KPIs, I think it's totally normal.
That's great. And if you had a more specific question, a follow-up, feel free to do so. Whoever just asked that in the Q&A. So again, I was just gonna circle back to this topic. I think you touched on this a lot with kind of thinking through, making sure your managers are trained in the culture and sort of demonstrating culture in their actions so that can kind of trickle down all the way throughout the company. But any last minute thoughts on this question around scaling culture as you scale your team, knowing that it's going to evolve and change? How do you make sure it isn't lost or deprioritized as you scale? So again, I know you addressed quite a lot of that topic, but any last thoughts on that?
I think the other thing, which I sort of alluded to, is making sure that you codify those values and missions, so that it's not only present with the individuals that you hire because you hired them on those things, but so that they can speak to them, they know that they exist. It's in your, it's on your wall, it's in your knowledge database, it's on your intranet or wherever. Also in kind of your hiring documents and how you think about that. I think also, I've seen companies that have built those values alongside their team. So maybe the framework or the structure starts with the senior leadership and they say, these are the things we really value. But then looking to the team and saying, okay, how are we demonstrating this in the company? Or what are things that we can be doing to achieve that mission or to serve these values? Or what are things that you see amongst your peers that demonstrate that? And then again, celebrating them so that you really drive in the fact that these values are important and noticed and celebrated.
That's great. Thanks so much for those final thoughts on that topic. So I'm going to give everyone a chance to ask any questions that they want to in these last few minutes. And while people are thinking, if they have any questions, I just want to talk to you, Laura, about, thinking through, obviously we have founders on the call, but when you think about markets that you think are well poised for hypergrowth, what is exciting you lately that you've been seeing, companies you've been seeing or markets that you think are really exciting right now?
Yeah. One in particular is the future of social, so social media, social networks, influencers, AI influencers, or synthetic media. I think it's a space that has been a little bit out of vogue or ignored for the past few years. But if you look at what's happening in the landscape around Facebook and all the privacy concerns and Instagram and just how much of a broadcasting platform rather than a social platform it's become, I think there's a real need for new types of either platforms or services or layers across existing platforms to serve changing consumer preferences. So I haven't found the right answer yet. If any of you are working in something in that space, I'd love to hear more about it, but that's one area. Consumer healthcare, I think, is really interesting. Healthcare and wellness. I think for millennials and Gen Z in particular, the way those demographics are thinking about it has changed a lot in terms of access, brand, payment, the types of services they're searching for or looking for. So I think that's a really interesting category. I think the infrastructure underlying a lot of D2C brands is also interesting. We've really seen this explosion of direct-to-consumer brands over the past 2 years. But now what are the picks and shovels for this boon? Is it micro logistics, delivery, inventory management, consumer insights? So I think things within that space are quite interesting as well.
Very cool. We did have a question come in while we were chatting. someone asked, what does an investor look for in a deck to show that we are trying to position ourselves to scale big, even if we're just starting out? How do I show that on a PowerPoint slide? Which I think is such a great question.
That is a good question. First of all, make sure you have a slide around what that big vision is. I think, especially for female founders, I find it to often be the case where they won't paint the big, crazy vision as much as male founders will. And I think investors are for that, right? I think, you know, this is broad strokes, but I've seen a lot of female founders who will over-index on, this is the plan, this is how we get here, this is the amount we're going to make, and oftentimes it's a fraction of what, you know, the big crazy number might be. And oftentimes investors expect that big crazy number to not be real and are discounting it. But when you're showing them, you know, this is a reasonable number that we're going to get to, they're still applying that discount, and it doesn't feel as
interesting.
So I would, at minimum, make sure you are demonstrating that really big vision, big market, and big opportunity. And then in terms of how you're positioning yourself to scale, I'm trying to lay it out on a slide for myself. I think different companies will do it differently, right? They might say, this is the big vision, and then it could be on a timeline, like, these are the milestones we're going to hit. So, you know, this is where we expect to be in a year, and these are the things we want to prove out. We want, you know, it's totally dependent on the business, but it might be for an e-commerce business, we want to have sold this many things. We want to have built our own infrastructure around this. We want to have developed a community of 100,000 people so that we have a really organic reach. From there, we're planning to build, you know, pop-ups and a brick and mortar store. If we can demonstrate those work profitably, we're going to do 10 more stores, or we're going to do XYZ. I don't know what it is for your business, but I think maybe on a timeline, you can show this is how we're planning to do it. From a technical perspective, if there are things that you've already started to build, or there's an architecture that you have that will really allow you to be scalable, I would put those slides in there. Maybe they're in the appendix. You can point to it if you want to get nitty gritty about it. But showing from a technological standpoint, you're doing all the right things. You know, having a hiring plan in there is important so that you can see how the company will scale as you hit those different milestones. So I think you can build it into different aspects of the business. And, you know, this is what we're doing in the near term for each of the things, right? Whether it's hiring, you know, technology, SKUs, or, you know, build out, and then, demonstrating where it goes over time.
Super helpful. Well, I think unless anyone has any other last minute burning questions, I think that we can wrap up. And Laura, you've been so incredible, and we so appreciate your time and your thoroughness in answering these questions. Such an interesting topic of hypergrowth. And we got a lot of great questions. So thank you so much, everyone who dialed in, for being so engaged and asking amazing questions. And with that, I'll hand over to Team Alice and Sandra.
Awesome. Well, thank you so much, Bianca. Thank you so much, Laura. This has been an amazing session with a lot of really great insight. For everyone joining us and asking all these great questions, thank you so much. If you have any further questions, or if you're looking for more support in your company, please make sure you join the WomanMade community on helloalice.com. It's a community in partnership with PepsiCo, helping to support female founders. So there's tons of great resources there. We have regular expert mentors such as Laura Chau coming and joining us, and Bianca and Lisa Wang as well, that help facilitate that. So thank you all for joining so much, and we'll see you all soon.
Thank you.
Thank you, everyone. Thanks, Laura. Thanks, Sandra.
Thank you. Bye.
Bye.